What is going on, everyone? Welcome back to this week's trading recap. Happy New Year, or happy 2026, and welcome back to Nate Trades. This is week number 8 of documenting my journey to becoming a consistently profitable day trader. Let's just get right into the week. This week, I took one trade and I faded two others. So let's get right into Monday. Starting off on the higher time frame and the bias. Going into the day, the bias was clearly short. This is what the 4-hour candle looked like. We had inversed this 4-hour bullish, and we had created this 4-hour bearish. And we did have a bit of a gap right here that hadn't been filled completely. So with this being the next draw of liquidity, I was short. So getting into the 1-hour, pretty much the same thing. We weren't respecting any bullish PD arrays. You can see here that we inversed this last 1 hour. So getting right to market open, the bias was just simply and clearly short. I was looking for a sweep of this 1-hour intermediate high, or this just a tap of this 1-hour bearish fair value gap to look for a short, or a tap of this 4-hour right here. So what did we do at market open? We made a big move up. We did take out the 1-hour for value gap, but we unfortunately left London high intact. So I wasn't looking to short right off of that immediately. I was just going to wait for price to just do its thing. So after displacing lower, we created relative equal lows here, which is a super strong draw of liquidity. So I was looking to short to that. Then we inverse this 5-minute right here, which if I was a pattern trader, I would have long this. I'm not, so I didn't. I would never, it's one of my rules, I won't go against equal lows. So I was looking for a short off of this 5-minute, and what happened? We retraced all the way up to this 5-minute. Now, one of the reasons, so I did fade this trade, and so I'll quick talk about that. So right here we tapped the 5-minute. One thing, there was like a couple reasons that I faded it. Number one was because on like a Fibonacci retracement, we had retraced almost to probably 0.7, which for retracements, it's usually good to have around 0.5. So it was pretty deep of a retracement. And because we had left London high still intact, I was thinking maybe we're going to be bullish from here, but I wasn't sure. So that was reason number one that I faded this one. Okay, so reason number two that I wasn't super confident in this one is that there was not a clear leg per se. Looking back on it, I see that this would probably be the clear leg right here that retraced into the 5-minute. But overall, like the entire leg was pretty big. It wasn't up, down, up, down, up, down. It was pretty just up. And so that was reason number two, was that there wasn't a clear like highest time frame for value gap that I should be looking for to short it down to these relative equal lows here. So that was kind of why I faded it. I was potentially looking for this 30-second, but by the time it inversed right here, the next 30-second was right there and would have been like terrible RR. And I was just slow to it. I was hesitant in taking the setup, and so right here it felt like FOMO if I entered because I was super late, all this stuff. Anyways, so this one I did end up fading, which is unfortunate because it did hit TP right there, which I would have been break even at this first 5-minute and just targeting this next 5-minute. That's how I would have played that one. I wouldn't have gone for the higher RR, probably around 4 RR towards the relative equal lows. Now after this, I was looking for a continuation short because now it was super obvious we inversed this 5-minute and this 5-minute here. I'll quick get rid of these. And at this point, I was still looking towards the relative equal lows if we got it set up. And we did. We retraced, we left the lows still intact, which was amazing. And then we tapped a 5-minute for value gap right here. Quick show you that. Bang, tapped a 5-minute. And the highest time frame inversion, or highest time frame fair value gap, 30-second through 5-minute in this entire leg, was a 3-minute right there. You see it's very small right there. So this is what the trade would have looked at. Now the reason I faded this one was because in my rules it says that I will not trade after my session. My session is 8:30 a.m. to 10 a.m. Central Standard Time, which is New York AM session. And so yeah, so I faded this one and it did like just chop around, which would have sucked because I would have been in my workout while this one uh, took forever to trade. And this is exactly the reason that I don't trade after my session is because after New York AM session, it generally just doesn't deliver. And that's something I've noticed, and that's the reason that's in my rules. So that is Monday. Those are the two trades that I did not take. Um, the first one, I think the lesson I'll take away from this one, from the first one, the 30-second here, is that I'm going to be super decisive. I'm going to be super on top of it. I'm going to be super locked in whenever price is around a level that I could potentially look for a trade off of. Whether it's a retracement to a 5 minute, I'll be looking at every time frame just consistently, make sure that I got a clean one. And if there's not one, I'm not going to be looking for it. So that was it for Monday. I didn't trade Tuesday because there was FOMC in the afternoon, and so price action is usually bad. I didn't trade Wednesday because New Year's Eve, terrible price action is what I assumed, and I think that's what it was. Didn't trade Thursday, obviously, it was closed New Year's Day. And then I did trade Friday, so let's get right into Friday. All right, getting into Friday, we had a neutral bias into entering the day, leaning bullish. So let's get right to the high time frames. On the daily chart, we had a SMT here with NQ sweeping out previous day high and ES not. So that was a sentiment for bearish, but we were respecting bullish, disrespecting bearish. Respected this 4 hour, disrespected this bearish 4 hour. So entering the day, I was leaning long, even though we had the bearish SMT. Above, we had a daily fair value gap here, and we had a 4 hour here, and we had this 1 hour right here, this 1 hour intermediate high. We had quite a bit of targets higher. It just there's good draws higher. So entering the day, I was leaning bullish. I was hoping for just a tap of any of these higher time frame P arrays to catch a long off of. So right at market open, let's get right up to market open. Okay, right at market open, we did manipulate lower, which right away I was thinking, okay, well we have the bearish SMT at previous day high. Maybe we want to go to previous day low now. So I was leaning bullish entering the day, but it was showing me bearish price action. At this exact time, ES was moving lower and creating lower lows. So ES went down, tapped the 1 hour, another 1 hour, the 4 hour, all of the higher time frame PD rays that I was looking for us to take a long. So right when that happened, we had an SMT then, obviously, and this was what the trade setup would have looked like. I did fade this one, and so I'll talk about that in a second. But yeah, this is what the trade setup would have looked like. Break even at the internal high, TP at the low hanging fruit around a 1 to 1.1, just being the current New York AM high. Stop loss at the low. It would have been simple. This was super clean, and in the moment I remember thinking it was clean. I faded it, and I'll talk about that in a little bit, but I'm disappointed that I faded it because first of all, it obviously won, and second of all, because I simply didn't take a trade that was my strategy. So that was super unfortunate. So yeah, I had conflicting SMTs, one at previous day high and one here at this draw right here. The overall narrative for this trade was to the daily fair value gap because that looked like the next higher time frame draw on liquidity. Yeah. So that was the trade that I faded. Okay, so getting into the second trade that I took this day, after we did hit the daily fair value gap, I noticed that, we didn't like really react off of this one. We kind of displaced through. And since the overall sentiment of like being bullish, respecting bullish PD arrays, I was just generally bullish overall still. So we hit this daily fair value gap here, retraced to a 5 minute. At this point, I was thinking we could catch a continuation long here because yeah, we did hit the daily, but there's still higher time frame draws here, being the hourly for value gap. There we had a 1 hour intermediate. There's a 4 hour up there. So yeah, that was the thought process behind this one. And I know we had the bearish SMT, but we had just displaced through that. And so again, I was leaning bullish. So that was what I did. So we retraced into this 5 minute right here. And getting into the nitty gritty of this one, I took this on a 30-second. Of this entire leg, there was a 1 minute right there, which I could have been more careful and waited for that one. But I mean, I like this one a lot. It to me, I read it like this. We made a move down here. We kind of made a move up here. We made a new move down, tapping into the 5 minute. And so I took this 30-second right here. Now, my lesson from last week was break even. Think about it logically for like a second, literally a second. Think about it logically, which is what I did. So I noticed here that ES never retraced into the 5 minute, and so with it being the more bullish one, I thought, okay, ES is probably going to hit the high first, and so when it does, and if it does, I will just go break even then, because it would be stupid to stick my break even right here. This is the lesson I learned last week. Yeah, like the internal high. That's like so stupid. That there's no point in doing that. So yeah, this was the second trade I took, or this is the actual trade I took. It ended up being unfortunately break even. It delivered exactly like I thought it would, and ES took out the high, immediately went break even, and then unfortunately and fortunately, it did stop me out right here, wicked me out, and then we ended up dumping towards previous day low and everything else. And I didn't catch any other trades throughout the day. There was no setups for me. But yeah, that was it for this week. This trade I'm very disappointed in because it was exactly my setup. It was literally my setup. It was literally my setup. It was literally an inversion with a clear break even, a clear A plus draw of liquidity. There was an SMT. It was with the trend. Everything was there. And so I'm disappointed that I didn't take that one. But yeah, let's get right into the lessons. Okay, so getting into the lessons from this week, I did just take one trade, 0 wins, 0 losses. It was just a break even, and then I did fade those two trades, and they both would have won. The one from Monday, actually two from Monday, but I stuck my rules on one of them, so I didn't take the second one. And then the one from Friday, which is unfortunate. I did trade with very low risk because of December price action and holiday price action, which was smart. And then I traded very defensively. I was only looking for A plus setups, which sometimes I just take A setups. If it's pretty good and the narrative is there, I'll take it. But I didn't do any of that this week. It was just only simply obvious A plus trades. I wasn't decisive enough and ready on Monday. When that 30-second inversion happened, I just wasn't ready for it. Wasn't ready to click sell right when the inversion happened, which was unfortunate. And then I simply faded a setup on Friday. Both would have won. Okay, so the weekly lesson for this week was I need to be more decisive and confident with my draw of liquidity so that I can enter trades quickly, and not be hesitant and waiting and get FOMO and bad things happen. So that's something I'm going to work on, and I'm going to be more locked in around potential levels that I can take a trade from, whether it's a 5 minute continuation, so at the 5 minute for value gap, or just simply levels. So what did I do right? I executed well with my break even level, which was my lesson from last week, which was good. And I was very defensive for the last week of December price action and holiday price action. What did I do wrong? I was hesitating and wasn't prepared enough on Monday, and also simply faded a legit A plus trade setup on Friday, which made me miss out on two winners. And then what will I do next week? I will take my trade setups when they appear, no matter if they're A or A plus, and I will be locked in when price is near levels I can trade from. So being locked in when price is near levels I can trade from means just quickly flipping through the time frames and just being ready with the highest time frame inversion, and just being ready for that and being aware of what that is. All right, that's it from this week's trading recap. I hope you have a great start to next week with the first full week of 2026 and good price action back. Me personally, I'm going to be implementing these lessons, and I'll be also upping my risk back to full regular amount and copy trading a funded and the other evals that I have. So yeah, that's it from this week's trading recap. If you want to follow along with my journey, hit the subscribe button below. I'll see you boys next week. Peace out.